what we've now started to see globally is steel prices come down, even as demands have been going up. So going forward, what are the kind of pricing pressure that we are likely to see as well? Joining us live, Seshagiri Rao, the Joint MD and Group CFO of JSW Steel. Let's figure out what's happening at the company, the competitiveness that we're seeing, pricing pressure as well. Good morning, Mr. Rao. Let's get straight down to it. After massive correction in steel prices that we've seen over the last 5 months, steel prices rose for the first time in the last week of September. The question is all of this going to be sustainable? How do you see steel prices perform till the end of this year?
Prices now are stable. That way, there was a fall in the last quarter. Across the globe, steel prices have fallen. In line with that, even in India, steel prices got corrected. Now we are seeing stability as far as the steel prices are concerned. Only way the raw material prices move from here on is very important to see how the steel prices will fluctuate in line with the raw material price fluctuations.
So that's a quick word as far as the pricing goes. What about demand? We saw volume growth quarter on quarter, but going forward, how is demand panning out on ground? What sectors are contributing most to demand?
As far as JSW Steel is concerned, you must have seen it is the highest ever domestic sales. We have crossed 5 million ton of sales in the domestic market. So it is a very good domestic recovery as far as demand is concerned. So whatever fall that we have seen in the exports of volume drop of to 37%, even that amount we were able to sell in the domestic market. Auto sector, there is a very good revival. Similarly, the renewable sector, there is a good demand. The government-driven infrastructure projects, there is a very good recovery. Residential construction, water pipelines, and various government projects, we are seeing reasonably a good traction as far as demand from these sectors are concerned. That is why we were able to really clock the highest ever domestic sales of close to 30% increase over last quarter. So there is a significant increase in the domestic sales.
Right. Mr. Rao, margins this quarter have contracted a whole lot. Declining raw material prices will also get reflected in the coming quarters, I'm guessing. Then will declining raw material prices coupled with rising steel prices mean that the worst of the margin pressure could be behind us?
As we have been guiding last time, when the raw materials were bought at a very high cost of almost $650 of the coking coal. So all that coal was to be consumed in the last quarter. So that is why the costs went up quite substantially. And the reductions which have happened is not compensating the fall in the steel prices in the last quarter. Whereas now raw material prices, particularly coking coal, got corrected from $650 to $300 levels. So that benefit of lower coking coal prices will come in this quarter. Similarly, the iron ore prices which were corrected in the last quarter, the impact of that also you will find in the Q3 and Q4. So all these benefits of lower cost of production in the full quarter will get reflected, plus the volumes which we will be able to do better volumes than what we have done in the previous quarter. So we are seeing the second half more optimistically than what we have seen in the Q2.
Considering the industry dynamics and impact of export duty on steel, any modification in your expansion timelines?
Expansion capex is in advanced stage. That way we are creating a brownfield expansion of 5 million ton at Vijayanagar. So we will get that commissioned by 31st March 2024. It is on track. So we are not changing anything. Those expenditure will continue to be there.
Given how H1 has panned out, any chance to change your guidance?
We have given a guidance of 25 million ton production and 24 million ton sales. Whatever we have achieved in the H1, and taking into account the kind of volumes which we will be able to do in the second half, we are sure that we will be able to achieve very close to our guidance of 25 million ton of production, 24 million ton of sales.
Of course, when we had seen energy prices go up, steel prices were also remaining high, the government had come out with that export duty. A lot is being said, Mr. Rao, when it's going to be rolled back. Is it going to be this month, next month? Is it only going to be at the time of the union budget? Now, as one of the largest steel players in the country, you of course regularly interact with the government. Is there a case to roll it back? Are you in favor of it?
So all the data that is required by the government is being provided by the industry, either in terms of domestic price correction and the international demand supply scenario. So this is known to the government. So government has to take a call based on the information that is available and the correction in the inflation. If you see the WPI numbers, which, particularly the manufacturing goods, it is coming down drastically. In the month of September, overall WPI inflation has come down to 10.7%. The weight of steel in the overall WPI index is very nominal. It is just 3.22%. So if you look at steel mint reports, in fact, the domestic HR coil prices or flat steel prices in the month of September have come down by 14% year on year. So there is a huge amount of correction which has happened as far as steel prices in the domestic market is concerned. So we are requesting the government to remove the export duty as early as possible.
Well, let's see if the government does respond and roll back the export duty as soon as possible, as the industry has been asking. Mr. Rao, it's always a pleasure talking to you. Thank you so much for joining us.